Morning. Welcome, everybody. Welcome and welcome. It is Thursday, and we had yesterday one of the, I guess, biggest down days we've had in a while in the S&P 500. We've been talking about the sell signal. We've been talking about the market and looking for a pullback. Quite frankly, it was a little bit more extreme than I was looking for. I wanted to see the Russell hold that swing low. The What we are doing right now is obviously rotating and getting into the February IWM call spreads. One is the main reason is why. Why am I so excited about the Russell? Everything that everyone was talking about the Russell is true. I think under a new Trump administration, we're going to get a deregulations immediately and help domestic companies. Obviously, drill baby drill is one topic. Number two is to pay people or give them extended credits, tax rebates, and other programs and incentives to build businesses back in the United States. That's going to help local construction companies, local providers, and domestic companies. And domestic companies should do well. So why did the Russell fall unprecedented amounts? I think a lot of people may have been long the Russell thinking it was going to go up immediately. They had all this time from approximately November 25th all the way into, I guess, yesterday to be a buyer of the Russell. That period of time got everyone in. So we got maybe a little bit early, jumped in yesterday, some call spreads for the February expiration. And so my comment was, we need to see maybe a little bit of the Wall Street Journal. So you've got to have all the people say how bad things are. The Fed's not going to cut rates anymore. They're not cutting rates as much as they were supposed to. And it's not baked into the market or it got overextended. Either way, you need that negative contrarianism to work its way in. You might have margin calls. We don't know what the pressure is for people in options, which is a big thing. Leverage positions. Those folks, it's also the quarterly window dressing. It's option expiration tomorrow. So there was a lot of really heavy duty position adjustments that that we underwent yesterday. The good news is we didn't have a lot of exposure to the really bad stuff. Our positions, currently we are in an option trade for January in NVIDIA. We have a Nike position, which we were in both a stock as well as an option. We got out of the stock yesterday before the report and took a small profit. We have Lam Research at 7605. We have Louis Vuitton, Beamer Imaging, Southwest Airlines. Hewlett Packard did get stopped out. We were long at 35 and a half, out at 33. So no harm, no foul. We're still in MGM. And again, Alphabet, big position in Google. Google, and I'll just bring this into speed for those that, as a review. We were expecting to see a pullback in the market. Thus, the reason why we have a position trying to enter in Alibaba at 81. I still believe PayPal at 86. Fortinet looking for cybersecurity. We wanted a pullback. Again, these are numbers that are down against monthly pivot support. Mobileye and again Estee Lauder. None of those really work to our favor. And in light of the market that debacled. So where do we go from here today and going forward? I really haven't changed my plan from what I announced yesterday. The JP indicators that we've created, a lot of people probably now are looking at the advanced decline. And again, I'm going to focus on the Russell because I believe we are going to see a big, we should see a recovery. It might not be today. Obviously, we're up 1%, whoopee-doo. What we should probably see is between today's economic numbers and then also foreign central banks. I mean, let's review the data. We could spend all day long talking about why Jay Powell confused the market yesterday in his press conference. We're still restrictive in interest rates. We're worried about inflation going forward, but we're going to cut rates today, and maybe we won't cut rates as much next year, but we're still going to look to cut 2 more times. How the hell is he can't even figure out whether inflation was transitory or not, and yet the market's going to believe that he has the all-powering globe of knowledge to figure out inflation for the next 2 years. I don't, it's kind of an interesting dilemma how the market reacted. We also have the central bank, which I felt was the biggest threat to the overall market is if the Bank of Japan raised interest rates. And remember back in August, on August 5th, what caused that massive meltdown, which, by the way, from peak to trough was bigger in depth and size and percentage change than the peak to trough move that we just saw over this length of period of time. In 1, 2, 3, 4 days, you could clearly see we go from 229 straight down to a low of around 195. And this has taken like half a month or more. And, to me, it's less of a move down. We had Bank of Japan that did not lower or raise interest rates. The Bank of England, though, did not lower interest rates. Interesting. The Bank of Japan cited we got to look at wage pressures to see if we need to raise interest rates. And the Bank of England said we're not lowering interest rates because we're concerned with inflation. Last week, we had the European Central Bank lower rates, and it seems that that's what Jay Powell was trying to get the global rate market in line together, and that's why they lowered interest rates. Now, what do we do going forward? Now, we've got a lot of maybe, we don't know. There's going to be some stimulus taken away from the market as we get a new president in. The numbers today, which, again, we revised the GDP. The GDP numbers today were revised higher, so it shows that it wasn't 2.9, it was 3.1, and we shared that link for everyone to review if you'd like to. What does all of this kind of mean to us? Well, I think this is important to move forward. It was a slight uptick, and this is the third revision. So they come out with an initial, they come out with a secondary, and they come out with the third and the final. In the third and the final, we have GDP that was higher. And it's interesting, and you can kind of scroll down to the bottom and say, well, where did the increase in GDP by industry grow? Increase was in government, led by state and local. Okay, well, federal is federal. They've already, kind of expanded federal government. And then the state and the local governments get money from the federal. So in the case of like Chicago, they're always looking for money. New York, they're always looking for money from the federal government. New York City's looking for federal money. So it's kind of like a really stupid way of saying, oh, it's not the federal government that was, spending the money. It was the local governments. And you can kind of clearly see and maybe read between the lines as to what the federal, the government pay packages and bailouts, let's call them, and what cities are getting insightful increases in expenditures. And it's whether it's for migrants, whether it's for, you call it whatever, it doesn't matter. But there it is. State and local government. They get the money also by federal government. But the interesting aspect was healthcare, social assistance, ambulatory healthcare services. Once again, this is interesting because healthcare, that's what was one of the biggest detriment to the market yesterday, was United Healthcare, also Cardinal, as well as Humana. Those healthcare and insurance companies just plunged, and they're the ones that are getting getting credit for an industry that's increasing and contributing to increases in the trend of GDP. I think that not going to be taken away by the Trump administration, and so small cap healthcare is what really got just absolutely crippled. And that's where I think that's the industry that we're going to continue to see up. Now, regional banks got washed out yesterday. Small cap technology, which we covered yesterday, by the way, when we walked in the door, I had a few stocks that I said yesterday that we gave out to everyone. One was, of course, Nucleus, which, once again, this is a company that takes payments of dollars and converts to crypto for retail stores. I mean, this stock was $1.20 2 days ago, and it's now again, the market just opened, my bad on this delay today. The stock's up to $75. I mean, yesterday we walk in the door and the stock was like 15. I kind of said, well, went to 22. And the next thing you know, in light of yesterday's debacle, this company's up to $70. IONQ, we had Ouster, which we have a position long. I forgot to mention one of our long positions. We bought this last week at around 965. Ouster is a sensor company competing against Mobileye. And one of the interesting aspects about this is it's not just for autonomous driving. It's also for drone making, which again, we got into a trade for a technical reason in a sector that was popular without me knowing that, oh wow, they actually do it for drone making. And many of us know all about drones, or kind of an issue in certain areas of the country, which no one's gotten a clear, concise feedback on. There's three sectors that have been hot in the market. It's anything to do with drones slash autonomous driving, number one. Number two, crypto, obviously, is a big thing. And then cybersecurity. So where are we going to go forward? I still think that in cloud storage and AI, that story's not going away. We've been promoting, and again, one of our positions here is Google. And I want to go over Google as far as a stock trade. We've been long. We did raise the stops in 67. This is a few weeks back. And remember when we got long this, probably again for the technically we got long, and I'm not going to say for the wrong reasons, but we got long for the right technical reasons, but maybe the wrong fundamental reason. Remember, they said that the Department of Justice, was all over the news 3 weeks ago, the Department of Justice was going to crush them. I don't want to get into storytelling time, but they were going to break them up because of, antitrust monopolyism on search engines. And I said, this is a hogwash story. You got Microsoft Bing, you got Safari, you got, they just dominate what they do in their business. But as it turns out, they came out with a new technology in quant computing their chip called Willow. They also came out with a cyber cryogenic cooling structure system that reduces the need for energy and cools down these servers. And that was breakthrough technology. And that, interesting that the technology that Google has with coming out with that is people are kind of concerned that maybe this technology moving forward will be able to break the crypto encryption of blockchain technology, and that worried maybe some of the crypto traders in with Bitcoin. The other thing that they're coming out with is they did sell off their wearable technology last year, but this recent time structure in the last month or so, I think they revisited and reapplied for a new patent on a wearable eyeglass technology that's going to use their glass. It's going to have speakers. It's going to have audio, visual, and they're also have a microphone that you can kind of talk and visualize and use wearable eyeglasses, not the big ski goggles that Meta has, but wearable technology with their new AI. So I'm a fan of the Googles and in here, and we still recommend those option positions going forward and in addition to our current position. So bottom line is Google should recover. I don't think the stocks are going to recover to the extreme of where they were 2 days ago for the most part. I mean, the indexes until maybe going into the first 5 days of the new year. We have Bank of China, People's Bank of China coming out at 8 p.m. tonight for their rate decision. Heavy odds are that they're going to cut rates. We also recommended 2 days ago CVS, which got just absolutely decimated. We recommended to buy believe it was the January 48 strike calls. And because I was like, this market got absolutely decimated. And I'm just asking for the market to get back to where it was on 1:30 p.m. on Tuesday. And yesterday, when the market opened higher and we traded higher, said, hey, these things, we bought them for 52 cents, dump half. You can't go wrong on a double. Rule of thumb, you buy an option, you make double your money, get out of half, and then you can let it ride a bit. So follow through yesterday, it was a little bit weaker. Right now, this to me looks like it is basing still CVS. What does CVS do? They're kind of in the healthcare pharmaceutical business, and there is some negative structure under the Trump administration in healthcare. So it might have put the fear of God into healthcare, but it's also what's really helped contribute healthcare, as I just shared with you, in regards to GDP. So I'm not quite sure Humana, Cardinal Health. I mean, these companies. I mean, they're all under structural weakness. And then again, the UNH, where again, this isn't because the CEO got gunned down in New York by some mass crazy psychotic. I don't want to say Well, I do. I won't say it on an open mic. But anyway, um, but the moral of the story is the whole sector is down, and that weighed in again on the Dow. So where's the market? Is the market going? Are these guys going out of business? Hell no. It's probably no one. Up here at 696 and then down to 473. This has kind of got some value, manageable risk trades kind of situation that I see a recovery. So CVS is a cheaper way of playing that kind of space. And I'm still, if you don't want to be in those options, get out of them, especially if they get back up to about $1.10. Meanwhile, we also recommended for the December 27th expiration, saying that China more likely is going to lower their interest rates and their economy is not faltering and going out of business. I mean, the news makes it seem that China can't afford fried rice noodles. Their economy is so bad, people aren't spending money. Well, maybe it's not 8% GDP growth. Maybe it's 4.5 to 6, and nobody really knows that story. But when we look at the numbers and we saw what was going on with President Xi visiting, really weird, Macau, we see people, and we also look at other clues like Wynn, which has exposure to Macau, and Las Vegas Sands, which has exposure to Macau. They didn't really crap out making newer lows relative to other names. So I'm not quite sure that's the proxy that we look at and say there's a good upside. But Alibaba, my humble opinion, BABA, Alibaba, if it gets down to the 81 number, we're still holding those orders ahead of tonight's People Bank of China decision. And then for JD.com, I still think that that's got a good option for an option trade, low risk, higher probability. So if they're cooking into the books already, really bad news. If it comes out good news, we'll get a positive reaction. The difference between CVS and JD is CVS, just a reminder, we're January, and I felt that if JD was going to move, we didn't need a January expiration theta with options because the event is going to be with China's Bank of China's reaction. We got our banks out of the way. We got Japan Bank out of the way. We got everyone out of the way. Now what do we look forward to? Some seasonality, option expiration Friday. We come in. Maybe people are kind of going to be boo-hoo, boo-hoo. Look what happened. The market went down. This is devastating. And then all of a sudden we get maybe a little bit more positive news. This could be a simple replay, but but with a different twist of 2018. In 2018, Jay Powell once again spoiled the market. I mean, he put a death grip on the S&P 500 under the Trump administration by actually raising interest rates. People might not remember that. So we can go down memory lane a little bit real quick, and we'll summarize this real quick. So in 2018, the market was already in a down spurt, and they came in and the Fed raised interest rates. But between the day after Christmas until a week after New Year's, the market was up, I believe it was like 17%. If you weren't in the market on that downdraft, you just didn't get in the market. It was insane. I don't know if anyone remembers that. So even with really negative news, it was also because of option expiration. The market got crushed, and it was like a capitulation, and then we had a massive recovery. We don't quite have the same type of situation. We were way oversold with the JP Mick oscillator. But here's an interesting aspect. We just got oversold. And the market didn't really go anywhere. And this is the SPY on a weekly basis. So we're not overbought, by the way. And it's a total kind of different dynamic because of the AI and the mega cap structure and the cap weightings of this market. But I would have to say we more likely have an opportunity for less negative valuation in the next week to 10 days, and we should get a Santa Claus rally. And I'm still more adamant about being long the Russell and rolling into and adding to the February call spreads, like I said yesterday. But it's up 1% today. Let's not add to IWM today. Let's let people reel from the Wall Street Journal, People's Bank of China. Let them kind of figure out this pressure that we have between option expiration that's going on. Scratch their head a little bit. It was a devastating loss again, what was that, like 10 days in a row? And we joked around with the Dow when we said 9 days in a row. It's like number nine from the Beatles album, the White Album. There was a song, number nine. People don't remember that. We completely filled the gap. The market's up. We said, listen, I mean, the breadth of the market wasn't bad. The volume wasn't bad. I wasn't panicking with yesterday's low, which is why we added to the Russell. Relative to the Dow, I think there's the Dow. If we get an uptick in healthcare, it's at least a recovery in UNH and a Humana. It might see some upside out of the Dow. More importantly, the Dow had already started this debacle. So now it's kind of at a better valuation, and a lot of people are panicking. What do we do now? I think the Russell is a better plan of attack going into February under this. And again, if I'm right, by the day after Christmas, and then, which again is kind of weird because it's the middle of the trading week, into the first 5 days or 3 days of January, we should see if we're right by upside potential. And then we'll give out more specific stocks as we get more details going on. That's my report for this morning. I got nothing really. It's a good morning to be alive and well. Thank you for joining me. And at least you have an idea of where we stand in our positions and what we're looking for moving forward. Thanks everybody for listening.